Welcome to PE turned RE, where we help everyday wealth builders. I'm Curtis Gardner, investor and agent with Inspire Realty. And today I am joined by Marcell Greenway. Thank you for joining the show, man.
Yeah, appreciate you having me on as always. Happy to be here.
Good. So today we're going to be talking about one of the best loan programs in all the United States, the Covenant Homeownership Program. Marcell, can you kind of tell the people before we get into that, kind of what your background is?
Yeah, so I'm a current loan originator with New American Funding, going on 6 years. It'll actually be 6 years in August. Prior to that, I worked in escrow for 5 years, so quite a bit of experience in all things real estate. My primary role is, of course, working with clients of all backgrounds and quite honestly, all income levels. I do specialize in working with first-time home buyers, which these programs primarily are targeted towards. So, first-time home buyers, people that may not necessarily know how or where to begin the home buying process and really putting a strategy together that helps them get there.
Cool. And so, yeah, you are just a wealth of knowledge. I think it's always great to work with a person that's seen multiple angles of how
Thank
a
you.
deal actually gets done.
Yeah.
That is awesome. So, can you tell us a little bit about what makes the Covenant Homeownership Program so special?
Yeah. Well, number one, the Covenant program, everybody sees the money, right? It's very attention getting when you see 20% down up to $150,000 plus your closing costs, right? That could be a huge savings for anybody. As we all know, we all live in this market. It is a high cost area, right? And wages, in many cases, haven't really kept up with the cost of housing or, quite honestly, many other things, right? So the Covenant program was designed to really be implemented with certain groups of people who have been affected by discriminatory lending practices and have family that has also been affected by these discriminatory lending practices. So this program was created to help curb that. Now, like we've talked about before in our previous meeting, this money is not funded via taxpayer. So this money doesn't come out of the general fund. It is not a tax. The money is sourced from a recording fee. So anytime anybody in Washington state buys or sells property, you are subject to a recording fee, right? It has to be recorded and reflected with the county that, Curtis Garner is now the new owner of said property. What they've done is they've simply increased those recording fees slightly, and that money has gone into a fund that actually is used to provide this program. Um, there is a loan forgiveness option as well. You have to be under a certain income limit to achieve that loan forgiveness. And the loan limits, as you know, Curtis, because you've done them as well, they do vary by county, right? So depending on the county that you're looking to buy, there's a certain loan limit and there's a certain income limit. Depending on that income limit, you may actually qualify for a loan forgiveness. So we give you a real life example, $500,000. Well, 20% of that is $100,000, right? Let's say your closing costs on that are usually about 3% of the sales price. So $15,000. The total contribution via the Covenant program would be $115,000. If you were under a certain income limit, depending on the county you purchased, that money could be forgiven as long as you lived in the house for 5 years and had on time payments.
Mm, that's powerful. That's like a gift of 20 grand every year that you don't have to pay back.
Right. Right. Just live in the house and pay the mortgage, which is the same thing that our renters are doing now, right? So if you rent
Yeah.
a home, you're paying, and in many cases, you don't have as many kind of support systems as you do in owning a home, right? There's various programs and various organizations to help you better budget and ultimately continue to be a homeowner because it is a very powerful wealth builder. As you know, that's how I met you, right? And you've
Mhm.
continued to kind of just blow it up from here, man. You took one and turn it into another, and eventually we'll turn it into another one. So yeah.
Nice. And one question that comes up as well, what type of home can I buy with this program?
Yeah, great question. So honestly, pretty much everything under the sun. You could buy single family home, you could buy a condo, townhouse, a manufactured home on land, and a duplex.
Mm,
So even bigger, right? If we're talking about building wealth, we get the Covenant program. We then buy a duplex, right? We rent out the B unit, we live in A unit. B is helping to offset the mortgage payment. And then in 5 years, as long as we reside in it, if we qualify, we're eligible for loan forgiveness. I really don't know of another program that has been designed in this way to help combat the housing disparity, but also keep affordability front and center. Phenomenal.
Mm, that is craziness. Like,
Right.
yeah,
Yeah.
yeah, up to 2 units.
Right.
You don't really have to come up with any cash to
No.
close. Now, something to keep in mind though, for those that are going to use this
Hmm.
program, I'm
Hmm.
guessing they have to pay for their own inspection, things like that.
Yeah, yeah. So any first-time homebuyer program, for the most part, you're going to be paying for your inspection and appraisal. Costs on that vary. It could be anywhere from, I would say, $1,000 to $2,000, depending. Every lender has their own fees and costs, so definitely check into that. And then, of course, earnest money, right? Earnest money in many cases is partially refunded back to you at closing, or maybe all of it's refunded to you at closing. So, again, the cost of entry are very low compared to a traditional home buyer buying for the first time, right? Which maybe typically is paying anywhere from 3 to 3.5%. The $500,000 example I mentioned, right? Just in down payment alone, you're paying anywhere from 15,000 to 17,500, right? This
Mhm.
program obviously is much cheaper by comparison.
All right, so I got two more questions before we kind of talk about what's changed.
Okay.
Um,
Yeah.
so with the inspection costs, with the
Hmm.
appraisal, with the earnest money, let's just use that
Hmm.
$500,000 house example.
Right.
How much cash does a person really need to have in their bank account?
So as far as like overall assets, that's kind of a loaded question. I'm gonna be honest with you. It's not a specific figure. It will really depend on which program they're using, because the Covenant does work with both FHA and conventional loan programs. Typically, they're not really too much, or they're not really scrutinizing the assets. As
Mhm.
long as we have the basics covered, right? We have the earnest money accounted for. And when we say accounted for, what I want to make sure that the viewers are really understanding is this money cannot be in a couch. Like we have to have it in a bank account. We have to have it in an asset account, right? So that can even be retirement accounts, right? 401ks, IRAs, brokerage accounts for stocks, etc. But the money has to be seasoned in some type of account within a lending or banking institution. Um, I wish I could give you an exact figure, but like I said, aside from the appraisal
Mhm.
and inspection, which I know on average is going to be $1,000 to $2,000 for both total, right?
Mhm.
The earnest money will vary largely on the type of home you buy and its cost. So that one will absolutely vary.
Okay. Yeah, and for most of the deals that I write up the offers on, the earnest money is about 1% of the purchase
Usually. Yeah.
price.
Yeah.
And so for the $500,000 example, if you had the 5,000 plus, let's go on the high end, your 2,000, that's $7,000 that they have
Right.
in some type of
Right.
account, bank account,
Right.
stock,
Exactly.
something. Okay.
Exactly. Exactly. So, but again, comparing that to a traditional home buying scenario where just the down payment is more than double that, right?
Hmm.
Because if we take 3% on a 500K, we're 15 grand just there, right? This is less than half of that, right? All in. So it is huge.
Perfect. So we got the cash concerns. That one always comes up is how much do I actually need? And
Mhm.
then the other concern that comes up is what's the credit score that they have to have?
Yeah, I tell people, yeah, because you do have a conventional and an FHA option, honestly, credit in most cases, a 600 or better will get you in the game, right? We always say 600 plus because depending on the overall strength of the file, there's other compensating factors. But I would absolutely plan for a 600 or better with this particular program. Yeah, and that
Great.
could be an FHA or a conventional. I actually closed a conventional loan with a 603 FICO, right? But because the other compensating factors were so strong, we were able to overcome the lower FICO score. But FHA all day as well, 600. The 20% down helps with that as well from the Covenant Homeownership Program. So if you don't necessarily have a ton of assets, receiving that down payment money actually helps the overall strength of the file.
Great. So
Mhm.
600 credit, some cash, and some type of account, and most people are ready to go.
Yeah, yeah, absolutely. Absolutely. Typical factors, right? Because you still got to approve on the financial piece. So we're looking at
Mhm.
obviously the employment, the income, right? Things like that. They go into any loan, right?
Yeah.
But if you have these baseline criteria in line, I would absolutely encourage you to reach out. And what we'll do when we wrap this up, Curtis, you have a copy of my flyer that
Mhm.
I send out to all of our clients or even past clients who may know somebody that may be potentially qualified for this program but doesn't quite know it, or maybe is a bit hesitant to reach out, right? Because it is a lot of information. So we're going to make sure to include that information as well.
That is great. So now we've kind of talked about the program, although I know as of April 20th,
Yeah,
there was a
April
big
20th. Yeah,
change on how the process
huge.
happens. Can you fill us in on that?
Yeah, yeah, big changes. So before, as you know, Curtis, we would submit the information to the Washington State Housing Finance Commission. They would review the required ancestral documentation. Based on that, they would either approve, deny, or ask for further information, right? If you were approved on the covenant homeownership piece and you were approved on the financial piece, meaning qualifying for a traditional loan, because you still have to have that, you would be able to go out and submit offers right away. The money was there for you, the closing timelines, everything would follow traditional loan practices, right? Now it's much different. As of April 20th, you will, of course, submit the ancestral documentation, whichever
Can I
lender you're
pause you
with.
right there?
Yes.
That is one thing that we did not touch on. Is can you just give us an example? What's the ancestry documentation?
Yes. Yeah. So depending on the party, and that's why we're going to attach the flyer because it's not an exhaustive list, but it will give you an idea. So things like death certificates proving residency, right? Or maybe proving race. Things like military records, school
Mhm.
records, certain medical records, right? These things, tribal records for our Native American folks, right? Anything that can prove residency prior to 1968, and of course the racial piece that needs to be covered as well. So
Okay.
when we're talking about the ancestral documentation, now we still gather all of that information, but while we're doing that, the loan actually has to be fully underwritten up front. So that takes a little bit of time, right? Not a lot, maybe a few days, depending on the lender, right? But once you've gone through the ancestral documentation, once you've been fully underwritten by the lender, we then submit that file in its entirety. So not only are they seeing the ancestral documentation, they're seeing the entire loan packet as well.
Mm.
And that goes into a queue. They will review it just as they've done before. If you are approved, they will essentially give you a ticket number. It's kind of a space in line. Depending on where that space in line is, will determine how soon you will receive your funds. On average, right now, they're taking 50 applicants per month.
Mm.
So I have clients right now, they're like 61. I think he's 60. No, I have one that's 100 and like 20. Sorry, 120th. I have one that was 60, but he rolled off. But he went to another program. Um, but this particular client, I think is like 120th or 121st. I'll have to double check. So
Mhm.
his projected timeline for receiving the money is August. August. He has been approved since late April, quite honestly, right? So he is going to have a bit of a wait. Now, of course, if folks roll off or their circumstances change, you could obviously climb that list, but this has 100% changed the game because now you're talking about a client who may be ready to go, but the funding isn't there for them, at least not immediately, right?
Mm.
So folks that are maybe approaching the end of their lease, right? Maybe folks that are maybe in between changing jobs, right? That could absolutely append their approval. So it's
Mm.
important that you work with somebody who understands this process, this new process, and understands your situation and can best help you navigate that. Now, also with that, right? Because now we're talking about your spot in line. Once you get to the point where you can receive funding, you
Mhm.
have 30 days to get a home under contract. So Curtis Garner, he's waited 3 months. He is now at the point where he's going to receive his funding to go out and shop for a home. Curtis, you have 30 days to find a home, to get it under contract. If you do not get the home under contract, you will unfortunately lose your spot in line and go to the bottom. So,
Mm.
the changes, I have my own opinions on them, as we all do, right? I get why they're doing it. Quite honestly, the program has been so successful that the money is being depleted faster than they can replenish it. So I understand that. Um, but it does put our borrowers in a bit of a bind, right? Because those
Mhm.
who are qualified now can't necessarily go out and shop now. And, kind of missing markets, right? We talk about the summer market always, where most of the inventory for the year tends to come out, right? Because families are relocating, maybe putting kids in different school districts. They choose the summer as a time to do it, right? Well,
Mhm.
for a lot of our folks on the Covenant program, unfortunately, they're going to miss a good portion of the summer market, if not all of it, right? Um, but the silver lining is that the fall market tends to move slower, and there tends to be, on average, better opportunities for our buyers to save money. So it is kind of a double-edged sword a little bit. But the biggest advice I can give anybody considering this program is to meet with somebody sooner than later. I've went back and reached out to several clients that, for whatever reason, didn't necessarily get to the point of being pre-approved, and have strongly encouraged them, to reapply, and maybe let's reassess where things are now. Because quite honestly, the timeline is going to be a long one at this point. I think new applicants as of today, I think are trending towards September for the time that they're due to receive their
Mm.
funds. So the sooner you get in, the sooner you provide all of the documentation needed, the sooner you can reserve
Mhm.
your spot. And, from then it's just a waiting game. Yeah.
Yeah, it sounds like with the new rules and the new timelines that are in place, it
hmm
seems like it's even more important now to plan before you think you're going to be prepared.
100%, 100%.
Mhm.
I tell folks now, if we can meet 6 months out or sooner, or ideally 6 months or even a little bit later, that's probably ideal, just given the turn times on when the funding is going to be available, right? So I would strongly encourage anybody who thinks they could potentially qualify, or even knows somebody who could potentially qualify, to apply sooner than later. And again, this is not a sales tactic, Curtis. You know that. Curtis didn't pay me to be on here. I'm just being honest, man. Like, you're right.
Yeah.
It's a real thing, right? We need to get the word out to as many folks that could potentially utilize this. So appreciate you, of course, as always, for having me on for that too.
Yeah, because it seems like some people will reach out right when they're
Mhm.
ready to go. Right then, they're like,
Yeah,
"Hey, my lease is up in a month. I'm ready to
yeah,
buy." And it's like,
yeah. We've heard
okay,
that.
well,
Yeah,
we can still help you, but this
right.
program is not going to really be an option now.
Right, right. And that's what I guess my concern is, right? Or my fear is. I
Hmm.
do, you're right. We do encounter those folks, and normally we're in position to help them, right?
Yep.
30 days out, 60 days out, we usually can make something happen within that timeline. Is it tight? Yes. But we can ultimately get them to the ideal outcome. This new development, or these new developments,
Hmm.
will completely remove that option from our hands. We won't have the option to kind of move things along at a quicker pace. And I really want to say that because I know a lot of folks right now are going to probably think it's more of a lender issue. It's not. I'm telling you now, it's not. If we could get you the money sooner, we would. It's 100% a function of the Washington State Housing Finance Commission. And I'm not saying that to down them. They've done a phenomenal job at administering this program and making sure that the program has only expanded. What I'm saying is they now have additional checks and balances in place. So we
Hmm.
all need to abide by them, right? Even if you find a home you love tomorrow. Unfortunately, if you haven't applied and you don't have a spot in line, there's no way of knowing whether or not you would get the money in time. And they've actually
Hmm.
encouraged us not to pre-approve anybody until we get that green light from them that the funds are ready for that particular client.
Okay, good.
Mhm.
So one thing that always comes up when we bring this up to a person that reaches out about this program is, okay,
Mhm.
well, what if I don't qualify? Like,
Yeah,
my family moved here in 70, not 68, right? Or
right,
something like that. Of
right,
what
right.
other options are there for down payment help?
Right. So there's several. And again, I'm going to shout out the Washington State Housing Finance Commission again because they have a myriad of different programs and they all vary from contributions to types that, whether it be FHA, conventional, VA, USDA, you name it, they have it. So there are many other types of programs that quite honestly have an abundance of funding, maybe not to the tune of the Covenant, for example, but from you getting approved to the program to you buying the home is a much smoother and faster process, right? So, I think the biggest thing is with the Covenant program, and particularly in my practice, I've done probably since just from 2025 to now, I think we've done maybe about 30 of these deals for the Covenant. So I have a pretty good handle now. Obviously, I've been doing them since it rolled out in 2023, right? But what I will tell you is out of even my, I would say last 30 clients, only a couple roughly really qualified for that loan forgiveness option, right? And
Mm,
again, you have to be eligible for it. So, what that means is for the rest of the folks, they're going to be paying that loan back, right? They're going to be paying it back if they refinance the home or if they sell the home. So, yes, it is a deferred loan, right? Because you're not actively paying on it monthly, but there will come a time where that check will be due 100%, right? So
mm,
I say that to say because a lot of folks think it's just free money that's being given out. The reality is the vast majority of folks utilizing the program will be paying it back. They will be paying it
mhm,
back. So a more viable option is to utilize some of these other programs, such as Washington State Home Advantage or honestly House Key, right? Where you can get funding now. It is available now. We can get you out into the market and maybe take advantage of the homes that are available now, right?
mhm,
So there's also nonprofits and things like that. I do work with several right now, in particular. A lot of them are depleted, which is normal for this time of year, right? Summertime is buying time. So, but when the funds come back available, of course, many folks will qualify for those programs, and they have even more lenient qualifications than even what the Housing Finance Commission does. So, nonprofits are still a thing. You could still utilize them. The Housing Finance Commission has a wealth of different options aside from just the Covenant Homeownership Program for all people, right? Utilizing those two. And I didn't even mention the fact that not only the nonprofits, some cities or counties actually have their own first time homebuyer programs, right? So there is money out there. It takes a skilled hand to help navigate you through where it is and how to get it, right? And that's basically what I'm saying. But the Covenant program, great on its own, but there are many other players in the game for sure.
Nice. Can you just give us an example of one of these that maybe you had a client that didn't qualify, but they used
Yeah,
another
100%.
one?
I'll give you one right now. City of Tacoma. City of Tacoma first time homebuyer program, up to $80,000 they will give you to help buy
Mm,
your first home. Now, they do have their own income limits. Yes, you have to buy in the city of Tacoma proper, right? So that doesn't mean Lakewood, doesn't mean five, right? That means Tacoma. The cool thing is that you can actually go and apply online, and there's actually a map that you can see. So if you typed in the address, for example, and like, oh, I'm curious if this will qualify, punch it in, it'll tell you, right? If it's in the blue
mm,
zone, it qualifies. If it's not, it doesn't, right? Um, but City of Tacoma is a phenomenal program. There are other cities and municipalities as well. That's just the one right now that comes off the top of my head because I know they have some money available and many folks may qualify for it. And again, not even know, right? So the
mm.
more you know, that's what we're basically saying here.
That is awesome. So with
Yeah.
all this information, really the gist of it is, hey, talk to a real estate pro before you actually want to buy, so we can help you get this roadmap kind of planned out.
Yeah, yeah. Sooner the better. Everybody watching, reach out, right? Whether it be Curtis, whether it be myself, please reach out, especially in light of these developments. And the thing is, with all these programs, I just talked about the nonprofits and how the money's not available for a lot of them because I check in with them, right? I would never overpromise something or make some type of guarantee that, quite honestly, we couldn't really fulfill. So get with a professional, reach out sooner than later, secure whatever opportunities are available for you, and then plan around them versus waiting and hoping for something to come about that doesn't, right? That's a big thing.
Perfect. Well, thank you for being on, Marcell. My contact information and Marcell's contact information will be in the description below. If you found this valuable or you think someone can benefit from the program, please send it their way. Make sure you like, follow, and subscribe. And until next time.